Welcome to this presentation of Understanding Business Insurance, a continuing education class for the low voltage contractor, brought to you by the Mississippi Security Association. The object of this presentation is to help you understand business insurance because there's so many different aspects that we can look at. Now, many small businesses operate without insurance because the owner feels that the cost is not affordable at the present time. This seems especially true of new businesses just getting started that only have one or two employees. So we're going to look at insurance and help you understand what the minimum insurance requirement would be, and then also talk about the risk that you might incur if you do not have some business insurance. So in looking at this, you have to kind of ask yourself, what is business insurance? A business insurance policy can help pay for losses from accidents, disasters, lawsuits, temporary interruption in their business, loss of life or disability of key employee, and losses due to cyber attacks like ransomware. The key to finding the correct policy for a business is to understand the risk associated with operating your business and what each type of insurance will cover and the anticipated cost of whatever loss that you occur. So many small businesses think that the general liability policy is the only type of business insurance that is available to them, and it's all that they need. So what they look for is the cheapest policy that they can find. Advisor Smith, an insurance research firm, reported that 3 out of 4 small business reported an insurable event in the year 2020. However, only 2 out of 3 small businesses actually carry any kind of business insurance. Let's start investigating insurance offerings, and the best place to look is a company that specializes in policies for the trade organization that you may be a member of, or at least one that serves your industry. In many cases, membership in a trade organization will get you a discount if you purchase insurance from one of the companies that they have a relationship with. We look at the types of insurable events that got reported to Advisor Smith. And most business owners think that the greatest risk would be covered by general liability. But when you look at this list, which shows the percentage of companies that had this kind of loss and the insurance that would cover that kind of loss, we see that there's a lot of different products up there that you could choose from. So several of these products could be covered in a commercial policy, but you have to know which ones of them to choose. What do they cover? What is your risk of having that? And then what you would need to cover with your insurance policy. The insurance coverage might be specified by your state licensing law, and we would have to have that to do business. Now, the most common one is something like general liability insurance. And in a lot of times, general liability insurance is required just to get a license to do business as a low voltage contractor. Other states may require workman's compensation insurance, or they may require you to pay unemployment insurance or be joined an unemployment insurance offering. I'm actually writing this course and putting this information together. I looked at over 20 insurance products and researched those products in the way of developing this course. And most of these products are optional. They are not part of a general liability. So as we go through, we will talk about some of those products. The most required part is that general liability insurance. And to get licensed in the state, you might have to show that you carry a minimum amount of general liability insurance. And this insurance would cover your employees, cover your business that does installation, maybe for residential security alarms. And there may be a minimum amount specified by your state that you have to have. You can see some of these in different states. They can be as low as $250,000. And that may very well be enough to cover you if you limit your business to residential security alarms. But if you're going to do access control and video systems and fire alarm systems, well, a lot of times what you run into is that architects or engineers and even general contractors may require a much higher level of coverage. And it's normally based on the size of the project and how much that project is going to cost, the total cost of that project. You will find those companies that work in the bid market where they are bidding on those types of projects, they will typically require anywhere from $1 to $5 million of general liability insurance in that. So if we use one of our specialty contractors, a lot of times they will come in and look at our business model, and they will look at the types of work that we do, and they will then suggest to us the limits of the policies that we need to carry. And they may either talk to us about the risk of doing business and possibly some other insurances that we might want to consider purchasing, either as an umbrella type policy or as standalone insurance offering. So depending upon those states that do have requirements for insurance, some of them even require you to have workman's compensation insurance, which would cover medical costs and if a person is injured. Most states have an exception for small business operators with 5 or fewer employees. Once you go over that, then most of the time you're going to have to provide that workman compensation. Subcontractors are not considered employees of the company, and therefore they're not going to be covered. So if you are a subcontractor, you may have to provide the general contractor with some type of certificate showing that you do have workman's compensation insurance on your employees. You can join voluntarily for this unemployment or workman's comp insurance. We need to be aware of those requirements if we are working with contractors on these public projects. Unemployment insurance is really not an insurance. Typically, we call it insurance, but it is a tax on the business that is paid into the state's unemployment trust fund. The unemployment trust fund was set up by the federal government, and they actually gave a minimum percentage, which was 6% of an employee's pay for the first $7,000 that they made. And that rate can move up or down based on the number of claims for unemployment insurance. Now, if an employee is fired for cause, like theft or damage to property, or, if there's cause involved, then they're not eligible for unemployment insurance. But our rates can change if we have that. Of course, there's many other optional insurance coverages to consider. And so this is a list of the possibilities there. Many of these can be written into an insurance bundle. So if you're buying business insurance or if you're buying that general liability, then you can specify that you want to cover some of these others. So what makes the buying decision? Is it worth it to have some of these coverages? Well, the first thing that you have to do is think about the risk What could you afford to lose if you don't have insurance? If there's a claim against you and you don't have coverage? Or what risk do you run being in this industry? What could happen? Could we damage somebody else's property? Could we have a claim against us? So we do have to think about the services that we provide. And that's where a review by one of your insurance underwriters of the business that you're involved in will help you determine, is there some other risk that I need to cover? And then you also have to think about the responsibility that you are taking on. You're providing professional services that are obviously going to be subject to different types of risk for those services. Do we buy just the minimum coverage? Well, what is our risk in operating a company with minimal insurance coverage? Maybe it's inadequate for the type of business that we're involved in. And that is where having a review by an insurance underwriter, it will help us, because the list of possible coverages of all of these different things. Now we're going to look at those kind of individually and see what they are, what they cover. The first one is general liability insurance, which is a basic liability policy, and it's for the protection of the business while they are engaged in the projects that they're paid to complete. That payment comes from a third party. So, if a property owner contracts with me to install a system, I'm obviously going to get paid for that. And if I damage anything on their property, then general liability would typically cover that. But it's going to have a maximum amount of coverage. And it may even have a deductible amount, the amount that you would have to pay out of pocket before the general liability insurance takes over. So when you look at a policy of general liability insurance, look for exclusions or the limit of the number of events that you could have. Some limits might be as much as you're limited to 3 claims per year, or it may have a 3 claims for the life of the policy. It'll cover 3 and then they cancel your insurance basically. So we do have to look for those things. Now, exclusions would be any violation of law or adopted codes or intentional acts. So we have to make sure that we review those before we sign for policy. And along that line, also pay attention to paragraphs that talk about attorney representation, where you're going to have to use their attorney, or if you're going to provide an attorney and they will cover the expense up to a policy limit. So those are some things that we need to be aware of in just a general liability type policy. A commercial property insurance, sometimes called business owner's policy, can be bundled with general liability policy. However, it can be purchased as a totally separate coverage that covers any property that is owned by the business. That would include any furnishings in the business of the building, which could even include leased business equipment, or any stock that you might have that is in storage inside the building, any tools or supplies or valuable papers like business records, outdoor signs and fences at the protected property that the business owns. So if a building is damaged by fire or weather, the policy can pay to restore the building, the damaged property, the building itself, and can replace those furnishings that cannot be reused. If I'm going to specify I want commercial property insurance, I need to check for exclusions or limits on acts like burglary or vandalism. And I need to look at deductibles. If you have to borrow money to get started in the business or to buy property, then the lender will usually require commercial property coverage as a condition of loaning you the money for you to get into business, because they want to try to ensure that you're successful and that you can pay the loan back. So those are some of the things that we look for. Some of the problems that we have is if you have commercial property insurance and you do have a loss, then they're going to want proof. So one of the things that we need to do is we need to maintain records of all of our furnishing, our office equipment, our tools. That means keeping an inventory. And we can do this in something like an Excel spreadsheet. We could go in and put in all of the information that we've got depicted on the slide, the description of property, the serial number, cost, how was it funded, where was the funding source, who holds the title, if it is a major property that has a lien on it, acquisition date, back it up with photographs, all of these things. In case there's a loss, then it's easier to account for these items and, have the claim covered in a reasonable amount of time. There's also a rider that you can get for claims for lost or stored property. Now, when you start looking at this loss of stored property, it can be from stuff that you have manufactured, or it can be products that you have bought for a specific job that is still in your warehouse, in your building. You may not keep a huge inventory of equipment back there, but you need to conduct an inventory on a regular basis and use some type of inventory control program so that you can keep up with this inventory that's held on the business premise. Because if you do have a loss, then you're going to have to show that inventory was on site and when you got it. Same thing that we talked about for business-owned tools and equipment. You can actually get insurance that would cover property stored on a building site, but this is not the same as the loss of stored property in your building. There's going to be another insurance policy or underwriters for that. Now, we talked about owning the business. What if you are renting? Well, then there is a business renter's insurance policy. If you have a loss, the company obviously is going to need a new location that it can operate from, or they're going to have to replace office furniture or tools. Business renters insurance company is going to cover those expenses that would allow us to get back up and get to running in a new rented location. So this is a rider that can be tacked on to a general liability policy and give the owner of the business that is renting space pretty much the same coverage as you would get if you own the building, like with a building owner's policy. Again, same documentation is going to be needed in case you have a loss for that. Another type of coverage is business interruption. This is purchased to give a business some assistance in recovering from a temporary interruption of their operation. The assumption is that the business is going to recover and to be able to continue in operation as soon as possible. So it's just intended to return the insured's business to the amount of profit it would have earned if there had not been a loss for that. It is not an insurance that is designed to put you into a better position, a more profitable position than if you had been able to operate and not have that interruption. Disasters like a fire in the building or a flood or a theft, building collapse, a strike, a riot where you would be affected could be types of coverages that could be covered under this business interruption coverage. Now, they typically look at three different levels of interruption coverage. Typically, when you're looking for this type, the insurance company is going to want proof of actual profits for a reasonable time prior to this loss that you're going to claim. Documentation, keeping up with all of the information, your profit and loss schedule, whether that. Now, you can have coverage if you think that you're going to have an extended period of time for loss of income after the property is repaired, but before you can get back up to the level that you were operating at, then I can actually get paid for that extended interruption until I can get back up to normal. And it might be that maybe I don't have all of the product that I need to bring me back to that pre-loss level, possibly because the manufacturer can't get it to me. And so we can look at, some other types of accounting for that. We could put in a rider for business expense. This is a type of insurance known as business overhead expense. And this is really designed to cover a company whose owner becomes disabled. It could be temporary or it could be a loss of the owner. That insurance will cover the actual expense like utility bills and employee salaries until you can replace the owner or until the owner can come back to work and be productive for that. It cannot be used to pay the employee's salary, though. It is mainly if you lose the business owner, it is designed to keep the business running. And that, again, is assuming that the business is going to be able to continue in operation. There's been a major increase in claims against employers for action that an employee feels are discriminatory or harassment. And it's really difficult for a small company to have a position that is dedicated to monitoring employees' behaviors and making sure that the employees are following all the rules, and that obviously that the owners are following all the rules. Larger companies can actually do that, and a lot of times they have managers that work in human resources that is their job. So this is a policy that can cover against claims by employees that could pay. And it can be added as a rider to a business owner's liability policy in case you have, claims against the company for negligence or breach of employee contract or sexual harassment. We've got a lot of those here lately. I've been, trying to keep up with all the news, and you see that it is prevalent in all industries. It's not just our industry, but it's everywhere. You hear about lawsuits for sexual harassment. Another policy is something called directors and officers liability. This is coverage for the officers of a corporation. So if your business is incorporated, if you have a corporate board of directors, or if you have an advisory committee that acts as an advisor to the directors of this company, then You want to protect the personal assets of those directors and those officers so that in case of a lawsuit, the person would not be sued personally for wrongful acts of company management, failure to comply with workplace laws or fraud or theft of intellectual property. These are all things. And we've had some very high profile cases involving people like Elon Musk, Jeff Bezos, where lawsuits against them the lawsuits were not able to collect against their personal assets because they're both billionaires, but it only went against the company or the company's insurance for those acts. You might consider contractors' professional liability coverage. Now, many small and mid-sized contractors work in the design build industry. If you're dealing directly with the end user, or if you have been contracted by like a general contractor to negotiate with the owner for the services that include low voltage systems, security, access control, video, nurse call, overhead paging, fire alarm, mass notification, emergency responder radio systems, all of those things are typically design build. That means that as professionals, we look at the plans, we decide where these devices go and what type of protection, what type of services that we're going to offer with our system. Then we're considered a professional, and our coverage then would protect the professional against some errors or losses incurred that might be incurred when designing or engineering or contracting directly with the owners. These policies are designed to cover risks that are not covered by general commercial liability insurance, because those might have an exclusion clause saying that they don't cover professional liability. A lot of times it will cover damage of economic loss and costs associated with the repairs if we have made an error, and because of our error, then a third party was injured or damaged in some way. So we look at getting a risk review, the types of designs that we do, and then the cost of that policy would be based on the types of risk that the insurance company would be taking to cover you from this professional liability and builder's risk for that. Now, you could have an overall policy that covers everything, or you could get a rider just for a particular project. So if you're taking on a very large project, then you may want to consider this, especially if you're doing the design build. Now, errors and omissions is a policy that you can get that covers a customer's claim based on negligent actions or inadequate work or misrepresentation of project of your product that you have, and it covers if you just make an error. And these can be either standalone policies or they can be included in a business liability or a professional liability service. But if you offer consultation with a person or a business for your services, then you might want to consider errors and omission for this. And obviously, it is going to be dependent upon the type of business that you engage in, your revenue, and also if you have had any past claims that says you made an error. Now, an error is something like you made an error in programming a system, and so therefore it did not function the way that you said this system was going to function, and therefore this person had a loss. That is an error. Intentionally not including something is not an error. So, we start looking at our work and what we have agreed to do, and then what is the type of loss. But errors and omissions can be added. It can also be covered in an umbrella, and we're going to talk about an umbrella in a few slides here. If you are involved in manufacture, or if you're a wholesaler, or if you're a designer or a retailer of products, then it's very possible that you might consider product liability insurance to help protect your business if your client has a claim against you because the product either caused bodily injury or there was damage to someone's belonging. Then this can be covered under a product liability. Normally, these policies will have some type of exclusions. So if you're looking at a product liability coverage, make sure that you review those. A lot of times an exclusion like that will be covered under some other portion of a general liability policy for that. So an example for this is, that we've got on the screen. If you sell a product that has a lithium battery and that battery catches on fire and causes damage to the consumer, then they could actually fall into this product liability, and they're going to be looking for deep pockets. And so when the lawsuit comes down, they're going to name everybody in the distribution chain. So they're going to name the installer of the product. They're going to name the company that designed the system. They're going to name the supply house that sold the product to you. They'll get through deposition, they'll trace this chain all the way back up to the company that actually made the battery that caused the damage. And they just name everybody in there. And so a product liability insurance policy will help pay for those costs to defend against that, because a lot of times we're really not liable. We didn't make the battery. It may have even come in the kit that we sold. It came from the supply house, that it was in that kit when it came from the manufacturer. So you can go up the line, but it would help pay for the attorneys in product liability cases. One of the other types of policies that is fairly new, this cyber security insurance. If you're a business that maintains any personal data or financial data, like credit card numbers or any specific data that might cover a type of system installed in a building, or the building's security measures or safety features, and you store that electronically, then the cybersecurity insurance might be a good thing for you to look at, because a lot of hacking, and normally it's more mid-sized companies, but data theft and hacking into computers. And you may say, well, I don't keep that in my office. We have a web-based storage solution out there. Well, it can still help protect, even though you're going to put some of that coverage back onto Amazon Web Services, if that's who you're using, or one of these others, if they're the ones that got hacked. But it, again, can be very expensive to defend against this cyber attack that can happen, because a lot of what we do today is going to be on the web or through the web. Even your monitoring, if you think about the history in your monitoring accounts, a lot of that, if you have access via a phone or a tablet directly to your customers' files through your monitoring service, then again, that is information that could be hacked, and we would want to consider cyber insurance or cybercrime insurance. Another type of coverage, this is insurance against property or actually, I guess, products and materials while they're being transported either to you or from you to a contractor's location. So losses such as collision, cargo theft are covered by this inland marine insurance. And it was inland marine actually got its name basically because of property being shipped. And you may think, well, that really doesn't apply to me. If you're buying equipment and that equipment is coming from China or from Vietnam or from Korea or Taiwan, you've ordered this product. You may have actually purchased this product and they put it on a boat and ship it over here, put it on a truck where it came into port in Miami or out in Los Angeles, and they ship it across country. Well, that would cover all of that. But it also covers mobile tools and equipment for construction, like landscaping, that is in transit, like construction tools and supplies, in transit from your location out to the site. Or if you store products on site that's in control of the third party, you have contracted with a general contractor to provide product, and he may require you to put product on site so that it's convenient, it's there, and he may go ahead and pay for that up front, allow you a draw for materials stored on site. Then those are things that can be covered by inland marine insurance. You can get this coverage that will help you if you're storing product. Once we get into automobile liability, if the company owns vehicles, then they need to have a commercial automobile liability policy, or what we call commercial vehicle insurance. It only covers business-owned vehicles, though. Does not cover personal vehicles, even though those vehicles may be used for business purposes. If I use my vehicle for the purpose of the company does not own the vehicle. That would go to my personal liability policy. So this is company-owned vehicles. Now, if your vehicles go to and from job sites, if they transport tools and equipment, if they're used for business purposes, transporting employees or clients, whatever, then they need to have a commercial automobile liability policy on them. And that way it will cover the vehicle and injuries that may take place in case that vehicle is involved in an automobile accident. If you are using your own vehicle, then you may need to have a rider in there for non-owned vehicles. So if you rent a vehicle, if you're leasing a car for business purpose, then you need to have this hired or non-owned policy. A lot of times this is just a rider that is put on the vehicle and put on that business-owned vehicle policy, because there are times when you have to rent or borrow a car, and this will give you the coverage. It's extra, so it doesn't normally come in there. The other coverage, this can be on the employee's insurance. They can get insurance to drive their car at work. So they're going to use it in the business, and it will cover. This is a non-owned policy, but a non-owned policy does not cover an employee driving a company vehicle for personal use. It is only if you're driving a vehicle, for the company. Otherwise, it goes on your personal insurance, your cars. Another insurance is trade credit insurance. If a company has a relatively small customer base, let's say that they have a customer base where 20% of your customers make up 80% of your total sales, then if that customer does not pay you, then it can be devastating to a company. So this is a type of credit insurance. If you're extending credit to this person, or if you are taking payments from this person, but you've delivered a lot of goods or products to this customer, then if they don't get paid, or if you don't get paid, then we can actually go to this credit insurance. Now, what they do is they look at your accounts receivable, and they look at all of who your customers are, and they may assign a credit limit to each one of the customer's accounts so that you can do business with this person, and they will indemnify this person based on their credit worthiness for up to this credit limit that they help establish. It basically protects you against bad debts. That can allow us to do more business with people and know that we're not going to get hurt too badly. But there is a downside to this. You don't want to go out there and tell your customers that you're covering them with a trade credit, because that could mean that they know you'll get paid, and so they just don't pay you. It would affect them, in their future dealings. If you decide that you want to have that coverage to kind of protect your business against non-paying customers, then you could do that. But now the insurance company doesn't have to take all your customers. That's why they look at your customers individually and try to establish their credit worthiness before they will write you a policy for this. But a catastrophic loss may not put us out of business. Key person insurance. This is basically a life insurance policy that provides a death benefit to the business if a owner or a key employee, like a top salesman, were to pass away, or if they became disabled and they would not be able to work. When you look at your business and you look at your reputation, and it might be linked to a key employee, either by name or by their reputation or unique skills that they may have. And so a death of that key employee could threaten the company financially. So this is an insurance policy, like a life insurance policy, that would pay to the business to replace this person or to cover that loss that key person was capable of bringing into the business for them. It's not for everybody, it's just for key people. But that is what we call a key man or key person insurance. It can be totally separate from our general liability, and it usually is. It's usually just a separate insurance policy. And you may pick out, if you have 2 or 3 main people that their untimely death would really affect your company, then to keep that company viable in the future, then that would be a benefit that was paid to them. Speaking of disabilities, you can get disability insurance. And this is the disability of an employee, a freak accident that could, injure this person, not necessarily take their life, but injure them to the point that they need either short-term or long-term insurance that helps them pay their financial obligations. It is not a replacement for their paycheck. It usually is just enough to kind of keep the bills paid or some of the bills paid, allows them to eat. And you may think, well, I don't need disability insurance. Now, a company can actually pay for disability insurance for their employees. And this is not the workman's compensation. This is a separate plan that pays the employee. When you think about the work that we do, we're in the construction trade, and we actually do some pretty dangerous work. So when you look at this disability insurance, they look at, well, about 25% of your employees will have either a permanent or at least a disability that lasts for more than 3 months before they reach the age of retirement. And the older you are, then the more likely that you're going to have this disability and you're going to need some type of income from this. A lot of times this is coverage for medical things like arthritis, or cancer, depression, heart disease, stroke. Some of those you can get over and some of them you can't. So it is a disability policy. I've known several people that have actually benefited from a company's disability insurance. You know, a couple of them actually been long-term, but several of them were just short-term in the fact that they were injured or they, like one had a heart attack and it was almost a year before he was able to come back to work. He was able to come back to work. This kind of helped kept the bills paid for him. So when you look at this benefit, the employer may offer a group disability insurance as a benefit, and they might pay some or even all of the cost, or they may offer it to you and you pay a little bit of the cost and they pay a bigger share of the cost. If the employer is offering this, then when you become an employee, this coverage can be an automatic enrollment for that. They take all comers at that point. So if the company is offering it, it's part of the insurance package and everybody can opt in. You can purchase it individually as an employee. If an employee buys a policy, then they pay the premium and it's usually locked in. When you purchase it, there is a set premium and that premium is not going to change. It will stay the same unless at some point in time you opt for more coverage. You make the decision on that, or the individual employee makes the decision on that. It's really good to kind of understand that before they write you a policy, they're going to look at your age. And obviously, the older you are, the more likely you are to become disabled during the years in your profession. They look at your gender. The women's policy usually is about 40% higher premium than a man's policy. And they base that on the fact that they actually have more claims for disability from the females than they do from males. And they look at your health history. Are you in good health? It's kind of like buying your own life insurance. They ask you, do you smoke? Have you ever smoked? What's your family medical history? Has everybody in your family died at the age of 58 or are they long living people? My mother lived until she was 91, so I should have really cheap health insurance. Maybe not. Your current height and weight, maybe they do a blood test. So the younger you are, if you're going to buy this disability policy, the less you actually pay because you're paying over a longer period of time. And if you pay for this coverage, if you change jobs, then obviously the insurance goes with you. It's not based on your employer like an employee-based policy, because if you ever leave that employer, then you lose your coverage. Your occupation is going to be very important. It's kind of proven. Construction workers, manufacturing workers are more likely to get injured on the job than an office worker. So if we're out here in production, then we're going to be subject to more accidents that could potentially kick into this employee purchased coverage. And they also look at how specialized your job is. Do you need special training? Is there something about your job that a minor disability would not allow you to continue your job? And what is your annual income? How much are you getting paid? A person that is an hourly worker that is only making $40,000 or $50,000 a year obviously will pay less for their coverage than a professional that is making $300,000 or $400,000 a year. And then, of course, they look at the location that you live in. Obviously, some states have better safety laws than others, even though safety is really regulated by OSHA, and we're all supposed to follow the same rules. Some states enforce those rules and some do not. So when you look at these types of insurance coverages, we can get an umbrella that can cover, because especially with the business insurance, the general liability coverages and things like that, we might have a limit. And so the limit might be we bought $1 million worth of insurance, but yet I can put an umbrella over that might be a $5 million policy. So an example would be if a customer was injured in your place of business and they filed a lawsuit against you for $1.5 million, and you only had $1 million worth of liability coverage, then the first $1 million would come from your liability coverage. And if they got a $1.5 million settlement on that, the other $500,000 would come from the umbrella. When you start looking at working in the public bid market, a lot of your general contractors will say you have to have a certain amount of insurance, and it may be either 1 million or it may be 5 million. And then you have to have an umbrella. Well, umbrellas don't cost as much. You can get a $5 million umbrella for less than half of what you're paying for your general liability, because it would only kick in if there was a judgment against you for greater than your general liability coverage. So again, you talk to your insurance carrier. A couple of last things to think about is disaster insurance. This is a type of insurance that will cover for major disasters, hurricane, fire damage, all of these other types of things, earthquakes. Before you start buying it, though, there's a couple of things to think of. The region that you operate in. Obviously, there are some regions of the country that are more prone to what we consider natural disasters. I live down here near the coast, and we have hurricanes. And not only do I have to look for hurricane coverage, I also have to look for flood damage, because hurricanes and floods, even though we normally get floods with the hurricane, a flood can happen just with a rain event. Look at what has been happening in 2022 with all of the floods in California, and even in Kentucky and Tennessee, we've had tremendous flood, and those typically require a separate policy. It's not just disaster. So you say, well, what does disaster cover? Well, disaster is going to help you recover from a business interruption or damage to your property in case of a disaster, like flooding, like earthquakes, like hurricanes. Now, before you go out there and start buying disaster insurance, you need to really have a plan in place for recovery. And FEMA, the Federal Emergency Management Association, they actually give some help in planning how your business can recover in case of an emergency event. And one of the first things that they talk about is making a plan, having a disaster recovery plan, and keeping these procedures up to date. We talk with our employees, make sure that they understand what our plan is going to be. Maybe we have to relocate, or our business is going to have to go to somewhere that we've not known before. It's just like with the COVID. Monitoring actually moved out of monitoring centers, and they allowed people to monitor from home. Now, to keep up the UL certification, there were specific methods of how to do that. But if you were a UL listed supervising station, having a plan is very important, and working within that. And there are people out there that can help with this, because we can come in and do a risk assessment based on your business model. That is why we want to make sure that we are using an agency that specializes in our industry, because the low voltage industry, the security, the fire alarm, the access control, all of those things have unique requirements that you may not find in other types of industries out there. So investigate a bundle and see what you can put together based on what you think your risks are, to be able to keep your company going. Now, of the types of insurance that we've looked at, those types of policies, you can invest a lot of money in insurance. Now, we're not trying to sell you insurance. We're trying to give you an idea of what insurances are available to you, and help you understand what they cover. So you work with your insurance agent to determine. Buying insurance can be a very expensive contract to get into. However, I go back to what we asked at first. What can you afford to lose if you don't have insurance? Thank you for your time. I hope that you get something out of this, and I look forward to seeing you in the next presentation.